Because if you think about it, one of the reasons crypto's not gone up is the fact that, and the networks are relatively slow, they've not grown in a while. It's because retail investors' income has not gone up as much as prices. So they've lost discretionary income. So therefore, people can only dollar cost average less, can get less involved. So what we're seeing is activity within ETH, for example, where people are trading NFTs and that money stays within the ETH economy. And there's been some switching amongst Solana, AVAX, Luna, that kind of stuff. But the space isn't growing because of this issue with wages and inflation. So that dynamic needs to shift somewhat.
Hello and welcome to Money Talks. In today's video, macro investor and CEO of Real Vision, Raoul updates about the key macro factors affecting the crypto markets, weakening of the economy, and Fed's changing narrative. Along with that, Raoul also shares his insights on his recent crypto crashes and why he doesn't believe in the Bitcoin's 4-year halving cycles anymore. Make sure to stick around till the end of this video, where Raoul talks about the significant moves that can spark the next crypto rally. So without wasting any time, let's dive right into the video.
So I think the macro needs to shift. So we can use bond yields, probably our indicator, or maybe oil, if oil breaks down. Until that changes, crypto's not going to have a chance to really sustain a rally. Then we start coming into, okay, there's a bunch of people who are trying to get the Bitcoin ETF approval coming through again in May. Maybe one of those gets it. I don't think that's not enough to spark the market because, you can buy Bitcoin if you want and it's just not been going up. So, but that just helps at the margin. Then I think the ETH merge, when that comes late summer, I think that's going to help too, because that creates a different dynamic and creates very interesting yield strategies for institutions. So I think those things together are pretty meaningful. When crypto rallies, you tend to get these kind of, 300 to 500% rallies in the bull legs. So, that's 150,000 in the next rally, let's say, if it goes up 5x, and then it corrects a bit and then it goes up again. It doesn't take long for the performance to compound. So, whether it's 3 years or 7 years makes no real difference to any of us. The point being is the long-term logarithmic trend of Bitcoin remains in place. And that trend will play out and how it plays out. But over time, we know where it's going.
Cryptocurrency bull Raoul is convinced that the current crypto bear market will end only once the Fed eases its hawkish monetary policy by halting interest rate hikes. That could happen in the next couple of months, according to Paul's predictions. Raoul said, "The Fed are unlikely to raise rates as far and as fast as people expect. My guess is they will probably stop raising rates sometime in the summer and that will be it." Also, Paul sees the combination of high interest rates and fear of an upcoming recession as the main macro factors that are causing the current crypto bear market. Retail investors' income has not gone up as much as prices, so they've lost discretionary income. So, people can only dollar cost average less, can get less involved. Paul thinks that the market's bottom has not yet been reached and that a mass liquidation phase involving crypto and legacy assets could be coming soon. Crypto could see liquidation spike at some point if we see one in equities, and then eventually that will be the final capitulation of the market, he said.
I don't not believe in the halving cycle. I just think it's less relevant as more players have come into the space. So it doesn't become the predominant driver, but one of the drivers. And as we talked about, macro is a big driver in the space that it never was before, because there are different participants in the market. The different participants, the institutional investors and the hedge fund investors, have also changed somewhat the structure of the markets. So that depends when they have availability of capital and they don't have availability of capital. So there's the market, as it broadens out in its ownership and participants, changes structure over time. But the key structure has always been the logarithmic network adoption model, which is Metcalfe's law. That is the key structure of markets. Whether there's a cyclicality based on the halving cycle or not, it's kind of largely irrelevant. What we're trying to say is, over time, adoption is everything. okay, what are the predominant drivers of network effects? And I found that two variables explained most of price. They are the number of active addresses, but more importantly, the value transacted on the chain. So Bitcoin is valued more than Ethereum for two factors. There's slightly more wallets in Bitcoin, active wallets, but Ethereum's catching up very fast. And there is the value exchanged in Bitcoin is higher. So for example, we're seeing Terra Luna buying Bitcoin, big size. We see MicroStrategy's big size. These size of transactions mean that the value of the network, if you've got big transactions and a lot of people doing them, makes it more valuable. ETH has a lot more transactions than Bitcoin, but they're smaller in value. So the total value being exchanged on ETH is actually less than Bitcoin, even though the number of participants is I don't know whether it's higher now or not, but either way, it's that value transacted that's the key part of valuing the network itself.
At one point, according to Paul, the Fed will ease its monetary policy, allowing some liquidity to flow into financial markets, thus sparking the next crypto rally. We'll see bonds rally, crypto rally, maybe some of the technology stocks rally, said Paul. Besides the macro picture, other factors that could facilitate the next bull run are the approval of a Bitcoin spot ETF and Ethereum switching to a proof-of-stake system, which is expected for Q3.
The market narrative for the last year has been inflation. Inflation with some elements of growth. That narrative is now changing as people realize growth is about to disappear from the economy. And we've started to see the weakening in things like the ISM survey and many forward-looking indicators. I've just done a huge piece on Real Vision about this, about the forward growth is slowing dramatically. So we get this market, this position for inflation and an okay economy. Suddenly, you take economic growth and all positions start looking troublesome. So whether you're long commodities or you're long equities or you're long technology, everything gets blown up at the same time because the markets really struggle when you change the regime within the markets itself. I think the regime is shifting eventually to inflation disappearing and growth going down. So a more deflationary environment. So what that means is the financial markets already have tightened instead of the Fed. The rate of change of 2-year interest rates has been the fastest on record, and that tends to lead to a slowdown in the economy as those rate rises kick in. So therefore, the Fed are unlikely to raise rates as far and as fast as people expect. My guess is they probably stop raising rates sometime in the summer, and that'll be it. So, and because the economy is going to be slowing down and inflation is going to be slowing down, that is exactly the environment that crypto likes. Crypto likes a slower growth, the Fed looking to on hold or maybe on ease. That's exactly what happened in 2018 at the crypto low. And we've got a very similar setup now. So we should, going forward, see a situation where as the Fed narrative changes and the markets start picking it up, we'll see bonds rally, crypto rally, maybe some of the technology stocks rally. So that's the phase I'm looking for from maybe the summer, but we've got to get from here to the summer first. And that's when this issue of positions being liquidated can go on. We're seeing the dollar go up a lot very fast. That unstabilizes markets as well. The equity markets can't find a footing. They've probably got another, if we follow 2018, they've probably got another 10% lower to come. That last phase, what I think it is going to be a last phase, tends to bring all assets with it. You know, gold is getting hit today. Cryptos can't, find traction. I think we need to see the fear of inflation dying somewhat. And, the bond market will probably give us our signal. Once the yields start rolling over and not going up every day, they're still going up every day. But once that changes, the narrative changes in markets, then I think the narrative will change for crypto as well.
Additionally, it has been reported that the $3.5 billion in Bitcoin purchased as a reserve by the foundation set up by the creators of the failed Terra blockchain became untraceable after it was moved to two cryptocurrency platforms, according to blockchain forensics firm Elliptic. What happened to the cryptocurrency held in reserve may become a key question if investors seek to recoup losses suffered in the wake of the collapse of the blockchain. Between January and March, the Luna Foundation Guard, or LFG, bought $3.5 billion worth of Bitcoin, Elliptic said, according to its blockchain analytics tracking tools. When the value of Terraform Labs' Terra USD, or UST, stablecoin began to fall on May 9th, the foundation said it would use Bitcoin from the reserve to purchase UST in order to maintain its one-to-one peg with the dollar. Over the next day, the crypto wallets used to hold the reserves were emptied. The remaining Bitcoin reserves were moved on May 10th in a single transaction to an account on the Binance exchange. The blockchain analytics firm isn't able to identify whether the assets were sold or moved to other wallets at that point. So when do you think the next Bitcoin rally will begin? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.